Um, Emily, we weren't actually surprised to see the numbers. We knew this was coming. We had a couple of discussions with Standard Chartered. They've gotten their act together. They have a huge amount of initiatives on the way. So all of this didn't really surprise us. But as you said earlier, what surprised is the total number of write-down in China. We were capping that at about 800 million. It came in at about almost 1.2 billion, which is the big write-down. So did HSBC. So that caught us by surprise. But overall, a good result from Standard Chartered.
Yeah, and we got a decent result coming through from HSBC, which we also got an announcement of a share buyback, additional buyback of $3 billion from HSBC, but I haven't seen anything come through from Standard Chartered. Is that a surprise?
Standard Chartered has actually announced, and I think it was in March that they announced $1 billion worth of buyback. And you remember the time when the CEO was notoriously quoted for saying share prices are crap and I'm going to buy back. And I kind of agree with that. The share prices are not indicative of the actual performance that Standard Chartered has shown all of last year and the first quarter of this year. So the $1 billion buyback for Standard Chartered, $3 billion by HSBC is not really surprising. They're maintaining what you would call a certain stable level for the shares so that their shareholders can benefit from a good dividend.
Cyrus, Dan here in Dubai. I wanted to pick up on that comment that Bill Winters made, calling the share price crap. That is despite that buyback and, of course, ramping up the dividend as well, which I thought was interesting. If you say that the valuation doesn't match the fundamentals for Standard Chartered, then what is the bank getting wrong?
I tell you what, I think the market sort of panicked, Dan. The market thought that the exposure to China and China real estate was probably oversold to them, and I think that is what caught the market by surprise. What they didn't cover, and which is a shame, is that they've actually gone into a joint venture with Manulife. And Standard Chartered, much like HSBC, has a very good private banking practice. They've got a thriving asset management practice. They're going deeper into mainland China. So I think when the market starts to see that fundamentally Standard Chartered business is sound, fundamentally the CEO and the new CFO have made decisions to sunset non-performing countries, and they are fixated, if I can use that word, in Middle East, in Africa, and in India, which is the boom market. I think the shares will eventually climb back up to its former glory.